VAATV, Vietnamese American Arizona Television.
Hello, everyone. Welcome back to VAATV.com, to the real estate world, and especially to the beginner who wants to do an investment and earn some profit. There are so many situations out there, and knowledge is the power. That's why we have Scott Bartlowe from SF Fuller Real Estate Investment come to the studio to provide all information needed to start the investment from small to large. So welcome, Scott, again. How are you doing?
I'm doing quite well. How about you?
Yeah, it's very good. It's getting cooler, so
That's
it's a great thing. Yeah, it's a great thing. We all say the same thing. Yeah. So I know last week we have some of the topics, some of the questions we answered to the audience. And so this time I know that somebody like to know when, and ask a question like, when is a good time to make a purchase in Arizona for the year? You know, is this a good time?
Well, in Arizona, there is a seasonality to our cycle of sales. And typically, we're actually, if you were to track it right now, you would see that we're kind of in the lowest part. And by the time that we hit December, we're probably at the bottom. And the reason I say that is sales reflect contracts, and the contracts are generally 30 to 60 days in arrears. So if December is the lowest month for sales, that means that December, October, November are the lowest time of the year for the number of contracts. And once we hit that December period, it starts growing and growing. And in typically March and April are the strongest months. But once again, if you take that 30 to 60 days in arrear, now you're back into December, January, February timeframe. So we're approaching the time of year where you see more properties coming on the market. And certainly come the first of the year, there's a big attitude change. I think every year you see it because, you know, the first of the year, people kind of think about something new, about doing something different.
Right.
And our sales follow that. Another reason why our sales seem to follow that here is we're very much still a tourist destination. And we have a lot of folks who come in from other states, and as well as Canada, and they come in, and in many cases, they really like our weather. Yeah. I mean, there's nothing to complain about our weather right now.
They call it a snowbird or something.
Exactly. Yeah. So businesses that do services or restaurants that cater to winter visitors, this is the time of year where they're doing very well. When it comes to real estate, this is a time of year where we get these out-of-state folks who come down here and they buy second homes. And year in, year out, that is what a lot of the real estate folks are looking for, is that infusion of out-of-state people coming in. And it makes the competition for the existing homes, like right now, we still have a little bit of a shortage of homes on the market, so it makes that competition even keener with more buyers and still fewer homes.
So it's a market for the seller at this time.
It still remains a market for the seller. The number of properties is depressed still. The number of buyers is higher than the number of homes, even though prices have gone up. So yes, it still remains a seller's market.
So at this time, I mean, how about any news or statistic regarding to the house price for the few, like toward the end of the year or toward like next year?
Yes.
Have something. Yeah.
Well, this particular report, this one comes from the Arizona Regional MLS system, and we get it on a monthly basis. Typically, it's several weeks in arrears. So, for example, here we are in October, and I've got September statistics. But what they are doing is they're actually predicting that October sales may be the lowest number of sales in October that we've had in the history of the MLS. Now, the number of sales is low, but the dollar volume, once again, the dollar volume and what homes are selling for hasn't gone down. It still remains very strong for the sellers. So the dollar volume is actually better, and the price sold per per home is better than it has been in a number of years in the past. Now they're anticipating, because of where the interest rates are, right now they're trending a little bit over, a little bit under 8%. And 8% is a bit more than what most folks are able to afford. They're predicting that if rates can get down to 5.5%, that would just totally rejuvenate the housing market here.
Right.
But as it stands right now, I think that we can probably expect to see a little bit more of the same. Certainly, if the Fed decides that the measures they've taken to reduce inflation and perhaps hold steady with the interest rates, and it'd be really nice if they started reducing interest rates.
Yeah, that would be wonderful.
Inflation is turning around. It's come down significantly, but it remains to Chairman Powell of the Fed and the rest of the board there whether or not it's come down sufficiently to go ahead and make those changes to the interest rates.
Yeah, because like even the house price coming low, the interest rate is still high. So it's still like a great impact for people who want to purchase and get qualified. Right?
Yep. And I can, unfortunately, some folks, they were thinking new homes might be the way to go. And there were folks here that at different times when the interest rates were going up, they put their deposits down and the rate had not gotten locked in. And sometimes it's taken 6 to 9 months to get a home built.
Wow.
So by that time, if you've had several interest rate increases, you may be priced out of a home that you were able to afford when you signed the contract.
Yeah.
So it's made it difficult for some consumers, and in some cases, they've lost their earnest money.
Right. So do you know why in Arizona, I know a certain popular city that the price still remain, very, very expensive.
Well, Paradise Valley, year in, year out, is always at number one.
Yeah.
But of course, Scottsdale also is very high. Cave Creek, Carefree. If you think about where the luxury homes are, those rates are higher.
They keep the rate. Yeah.
Yes.
They keep the price. Yeah.
But you look at other towns like Tempe, Chandler, Gilbert, Mesa, they all remain strong. They're all good destinations, and jobs are being created in those communities. So there is competition over even though inventory is small, there's still competition to purchase a home because people want to be close to work.
So the idea of getting purchase a home to live is what factor that they have to look in? If they're family, that they have to focus on what? School?
Yes. Schools and the old real estate adage, location, location, location.
Yes.
But if you're the home buyer, what are you looking for? You're looking for a good neighborhood.
Yeah.
You want someplace that's safe for you and your family to, and you want it close to the things that are convenient for you. The schools. Where do you go shopping? How close are you to work? Those types of things. What other amenities does a particular city offer? Some cities have like Tempe's got Kiwanis Park. They've got recreation centers with swimming pools and those types of things. Those types of amenities that the individual cities have are attractive to different buyers.
Right. So the less to drive, the travel, the better. If you can reach to all of the destination, and especially about school is that there's certain school with a high ranking and things like that, right?
Absolutely.
Yeah, for that.
And there's resources where you can go where you can look at that.
Yeah.
Just Google and you can actually go to some of the state websites and they will tell you where the schools rank as well.
Yeah. Okay. So a lot of people want to know so that they can get ready because they make the income, but they don't know how much and how they can what kind of the house price that they will be looking for or dream of getting it. Maybe you have some of the financing information that you share with them.
Let's talk about that because talking to a lender before you go look at a home in this day and age, it's almost mandatory. If you find a home that you really like, you're going to have to talk to a lender. You're going to have a form that's signed by a lender to indicate that you've talked to them. So let's start off with two terms. One is pre-qualified and the other is pre-approved. And what do they mean? Pre-qualified means that you've talked to a lender and you've given them basic information, like about how much you make, what types of debts you have, and give them a basic understanding of what your financial picture is. Now, they can write up a form and that gives you pre-qualification. All it really means is that you've spoken to them. They haven't pulled credit reports. They haven't had W-2s. They haven't had pay stubs. None of those types of things have they reviewed as of yet. So all that stuff, it sounds fine. You've got the form and the lender is basically saying that this person who's asking to borrow generally meets the standards of qualifying for that amount. Now, the much better approach is to be pre-approved. And when you're pre-approved, what that means is you've already talked to a lender. You provided them with all of the information to document what your income, what your debts are, so that they can properly document and calculate your debt to income ratio and then include how much home you can buy. Generally speaking, you want to be around 40% or less of your total income going to housing, because you still have to pay for food. You got to pay for, if the kids are going to school, you got to pay for them, and there's other activities. You got to pay for, you probably have a car payment. You've got to buy gasoline. So all of those things.
And the reserve too, right?
Yes,
Yeah, a few
you have
months,
to have
right?
a reserve. So all of those things come into play, and they will calculate what you can really qualify for. The best thing that happens when you've got that pre-approval letter is you're a stronger buyer. If I'm a seller and I get an offer from somebody that's pre-approved and I get an offer from somebody that's pre-qualified, and they're both offering the same price on the home I'm selling, I'm going to take the person that's pre-approved because the likelihood of them closing is much higher than the one that's pre-qualified.
Yeah, because each of the offer always said that the transaction can be canceled in contingent to approval of the financial.
Exactly right.
Yeah. So they, of course, the seller want the sure things. So,
exactly right.
So they go with the pre-approved instead of pre-qualified.
But that's also where the cash buyers they beat everybody.
Okay, yeah, that's true. Yeah, and then how to beside that, I know the rate term and everything very important. Is that credit? Is that what?
There's a whole variety of things that go into that. So obviously you need to talk to the lender. There are so many programs out there, lending programs, and I don't even pretend to know all of them. I know some lenders don't carry every lending program, but in general terms, you've got FHA. FHA generally is the type of program where a lot of first-time home buyers would come into. It doesn't require as much money down for the inception, but you do have some fees that are added on, which will automatically drive up your
closing costs they pay.
Well, not just closing costs, but you'll have a monthly fee. You'll have mortgage insurance.
Oh, okay.
Where it's actually an insurance policy that protects the lender.
Is that no down payment things or
no down payment?
No down at all.
Could be the same.
Oh, could be the same.
Under VA, Veterans Administration, and that's those types of loans are favorable to veterans, and you do not have that mortgage insurance. Veterans can put down a very minimal amount, and as long as they can qualify for the payments, and mind you, they don't have that mortgage insurance. And to tell you the truth, some of the impact that mortgage insurance have, think about it. Think about paying $200 to $250 or $300 a month for mortgage insurance. That eats away at how much house you can buy. So you want to be sure up front that you can afford that, not just the payment on the house.
Is that the MI stand for? Is that mortgage insurance? MI, right? MIP. MPI. Yeah. Okay. Yeah.
So those types of things fall.
It's different than the hazard insurance, right?
Exactly right. The mortgage insurance is an insurance policy for the lender in case you default, so that they can get a portion of their loan back. And generally, the less you put down, the more likely you're going to have to pay that mortgage insurance. Then, of course, there's other types of loans out there. As I said, you've got the VA, the FHA, There's conventional loans out there. Conventional loans are generally regarded by lenders as a little bit safer. Traditionally, they like to see about 20% down. Some of the conventional programs are requiring less. Some, I understand, are down as low as 5%, which brings you down to some of the same types of things that you're going to have to deal with under an FHA loan. But generally speaking, if you're paying a larger amount down, you're not going to, and you're above 20% down, you won't have to pay MIP. But sometimes it's difficult for people to accumulate that much.
But is that like a requirement? Like they don't have to have a down payment, or that's the option? Like even they put a down payment, they still qualify as a VA or FHA, right?
They could.
Yeah.
Some of the programs have minimum down payments, some as low as 3%. There are others where there's down payment assistance. And, the whole idea is that, especially for first-time home buyers and people trying to get into affordable housing, the government has some programs out there to assist those folks. But the key thing is talking to a lender who has those types of programs and can help you walk through it, because you will have some expenses. There's no other way of putting it. But if you're having a hard time getting into something, then you'll want to go through one of those programs, and they can assist you with that.
Oh, yeah, that's what we want. So they can even go to their bank, right? They can
go to the banks
to get like a pre-qua or
pre-approval.
Yeah.
Yep. Generally speaking, the big banks, think of it as Chase, Citibank, Wells Fargo, Bank of America. Though they will all lend on homes, but there are other mortgage brokers out there that are just as aggressive, in some cases much better suited for residential loans. I don't have a particular lender that I favor. What I suggest folks do is start off simply, get on the internet and see who's advertising, what their rates are. And you'll see very quickly that there's a difference between lenders, because some of the lenders will actually talk about their programs that they cover. And there will be some lenders who will not do some of the FHA or the lower value types of loans.
Right. Yeah. So the loan, I know like financing, we talked earlier before we get into, like you say, like when you want to buy a house, when you're planning to buy a house, to get the good qualifications, like do not apply any of the loan, of car loan or any other little loan, because that can affect the credit.
Exactly right. When you're talking to a lender, you need to make sure that your financial system or situation is as stable as possible. The last thing you want to do if you're in the process of trying to buy a home is open up another line of credit, whether it be for a car or a credit card or swimming pool or whatever it is. Do nothing to bring any more debt under your name until after you've purchased that home, until you've closed. If you've been around any realtors for any length of time, you'll have people who have stories of clients who made an offer on a home. They were set to close this week, and they were all excited. And you know what they did this week before closing? They went out and bought a new car. Well, what happens is the lender, before
they
fund.
Right
before they
fund the loan, then they stop funding.
They stop it.
Yeah,
and so
they say, "Oh, the ratio too high, so we cannot take it." So the ratio, like the debt ratio and the expand ratio, for that, right?
So you need to keep that as stable as possible, and on occasion you may need to talk to a lender a little bit in advance if you've got some debt that's been hanging around that may be adversely affecting your credit score. You may need to get rid of that debt, or they may need to advise you on how you can move that debt and then get get your credit rescored. So there'll be minimum credit scores for some of those different types of loans.
So this is hilarious. Sometimes when we have something in mind, we thought it's complete, but like we have to really wait for until it's final. Like what is the final? It's like recording. When it's called like
Absolutely.
confirming of the recording. Because if people say, oh, tomorrow they're going to fund, so let's celebrate, let's go do this, do that. Yep. And then things happen. And,
yep.
and, you know, so bad. Like you said, like I can feel that for them. You know, like they say, oh, 2 more days, they got the house. And then they have to be, you know, cancel and back out because of all those
exactly right.
unplanning things happen.
When we refer to recording, what that actually is, the process for funding, getting the loan documents, getting all the documents signed, the closing costs, everything is kind of compressed down into a short period of time at the title company. And once the title company has the loan documents signed and they've got all the other paperwork done, they send it back to the lender who reviews everything, and then they make a decision to go ahead and fund.
Finalize.
Once those funds are received at the title company prepares a document and they send it to the county recorder's office. When the county recorder's office acknowledges that document has been received, that essentially has been the change of ownership. So it is now closed. It's changed owners. And the title company gets a notification from the recorder's office, and in turn, they let all parties on the transaction know. That's the magic thing that you're looking for, so that you know that escrow has closed.
Yeah. And then do not travel anywhere far when you don't see the title recorded, because sometimes the loan funded, then you're happy, you thought it's done. But like something happened with the seller payoff statement or something they have to update, and the title couldn't get it on time, and they couldn't record it on time. Or like missing some document that requires signature.
Well,
you know? Yeah, something
exactly.
like that.
But, you know, an interesting thing, and it's not very... I should say it's not uncommon, you know, that say the lender does their funding and it comes to the title company just before 2 p.m. I say 2 p.m. because you think about it, banking works off New York City and Washington, D.C. time.
Yeah.
So they're 3 hours ahead of us. That means those wire transfers through the federal banking system, they shut down at 5 o'clock East Coast time, 2 o'clock our time. So if it's not done by 2 o'clock our time, it's going to kick over to the following day.
Yeah.
And so that's...
Or like if it falls into the weekend, then you guys have to wait for...
If it was a Friday afternoon, you'd have to wait till Monday.
Yeah.
So it's very important to pay attention to exactly where it's at in the process.
Yeah. So do not like do an early celebration or happy when something. Well, for me, I always wait the last minute. I go, okay.
I can tell you, just this spring, you start thinking that you've seen everything. Yeah. And just this spring, I had a transaction, and it was an estate sale. But the buyer, who was also another realtor, he was under the assumption that we were going to close first thing Friday morning. My client and his representative didn't sign until 11 a.m. Oh boy! Yeah. Now we closed, but before 2 p.m., so we were fine. Yeah. But the buyer, when I went over there to put keys out into the lockbox so that he could take keys out once it was time for him to take possession, he already had the house opened up. They had already knocked walls down. Oh no! They were pouring. No. You know, they had a sunken floor, and they were pouring concrete in the sunken floor. Oh my God! I'm going, you don't own the house yet. Yeah, right. If something happens, so, what they gonna do? I mean, I mean, like the agent cannot provide the key after it's confirmed, though. No. Yeah. So that was a situation where this is really disaster. God. If something had gone wrong, people would have lost their licenses. Oh, yeah. So just a little wait for those magic words. It's recorded. Confirm. Is that confirmed? Yeah. Yep. Yeah. So I see like, of course, everybody happy when they have a purchase and get that purchase done. But like down the line, always something happen. And then when they reach to that fall, if something happened to the house prior to the closing, like a 2-3 days of the closing,
the house flooded or something, then that's another hassle.
Well, it is, but
For that.
the contract has a provision in it.
So we better do the walkthrough, right?
True, but the contract has a provision in it, and what it basically says is this: that if a house is in escrow, the buyer and the seller agree that if that house is damaged, whether it be fire, water, wind, any type of damage,
Right.
if it's 10% or under of the value of that house, that the transaction will proceed. The reason being that in most cases, the insurance claims are going to pay for the repairs. If it's above 10%, the buyer has the option of deciding whether or not he wants to go ahead and go through that transaction. But like I said, the magic number is 10%, and it's already in the standard contract.
Wow. Yeah. So so each of the transaction always has those little things at the end. Almost at the end. It's a long journey. Like sometimes I'm talking about if you buy a home or you buy something that you borrow a loan, then go through with all the qualification, paperwork proven, and everything to the lender, and then like sometimes they overwhelm for the lender from the lender point, and they say, "Oh, so lender take me, okay, that's all." They don't worry about any other things,
Right.
like what you call it, status of the house or what's the house arrangement and all that. So,
Right.
so at that time, because I want to ask you, what is the like the real estate agent position? Like very important, like during that time, because to help the buyer, right, go through all that.
Whether you're representing the buyer,
Cannot like, okay, here's the things, and then expect the buyer to know all that, because their first time they don't know, right?
That's exactly correct. As a real estate agent, sometimes you feel like you're herding cats, and I jokingly say that, but there are so many people that are involved in the transaction: inspectors, title people. You may have contractors involved in it. You've got termite people who do inspections. And then, of course, you've got the lenders. So all of these different people, they have different interests in that transaction. So one of the roles of the realtor, whether he's representing the seller or he's representing the buyer, is to make sure that you're communicating with all of those people to make certain that they're following their timelines.
Yeah, that's true.
And that your client's interests are being represented. And of course, as you mentioned, there's a lot of folks who buy things in real estate, and we have a lot of funny words that we use in it that you don't use in everyday language.
Right.
I'd like to say that's part of it might be by design, so that you have to get a realtor, but in actuality, there are it is a different language, and you need people to help keep the process on track, and they know when things are getting off track, and they can have solutions to get things back onto track.
Yeah, because I know like the headache of purchase a single family is not as much as the condo or something with the association.
Well, right? and that's becoming more and more common because the expense of building condos and selling each individual unit is less than it is for a single family home. Because they have like all the policy and rule and all that the buyer need to know and understand. And many times when you have a developer who's coming in to develop, whether it be single family homes or condos, the cities are going to have them go through a process, a development process. And one of the things that the cities often want is they'll want that developer to pay for the infrastructure. Things like the sewers, the water lines, the roads, those types of things. But they have to be built to the city's standards. Sometimes the cities, when that complex is done, they will take over ownership of those types of infrastructure. So then the city will be responsible for the road. But on occasions, in some of the adult communities or gated communities, almost always, those are private streets. So then you have an owners association who's responsible for all of that maintenance. And once you have owners associations, you have CC&Rs, covenants, conditions, and restrictions. Those are basically the rules of the road for for living in that subdivision. They'll include things such as how big a house you have to have in there. There can be both minimum and maximum size homes built there. You'll have setback requirements. Sometimes only setback requirements, which is how many feet away does the house need to be from the property line. That may only be a zoning requirement set forth by the city. But other times you may have CC&Rs that say it's got to be a certain size house and it has to be on, it can't occupy more than 50% of the land in that lot. Right. So there's different rules that you're going to need to be aware of there to make sure that you comply. The HOAs and the Owners Association in some of those subdivisions, they can also add other amenities. Golf courses, swimming pools, pickleball courts, tennis courts, those types of things that become the types of things that draw people into that community. But ultimately, who pays for it? Well, it's the folks that are living there. They will have, in addition to that monthly mortgage, which we were just talking about. Now you've got your mortgage, and in that mortgage, you automatically will have your taxes, your property taxes. You'll have hazard insurance. Then you add the MIP on there, and then if you've got a $300 or $400 HOA dues, all of those things add together, and that affects how much house that you can afford in that subdivision.
And like you said before, get into the purchase contract, then if best to know if the budget for that whole complex have enough, because if they have a lien or if they have something, then the new owner will be carry those together with them.
Absolutely.
With them, right? So extra money to spend.
You bring up a great point, because back when we had the recession, there were a lot of HOAs where people just, they went bankrupt or they got foreclosed on, they had short sales. So the HOA dues were not getting paid.
Right.
The HOA still had an obligation to make certain that those services that they had already promised to the other residents who were paying their bills, that those services were being paid for. So what happened is they got into arrears, and they, in some cases, may have had liens. So as new people came in to buy those properties that had been foreclosed on or had a short sale, they were having to recoup a portion of that lost income. In some cases, they called it different things like capital improvements, capital funding, but they brought in additional funds from people who were just coming into the subdivision to purchase. And so when you're looking at a home, one of the disclosures is you have to receive an HOA disclosure, and it will tell you what your transfer fees are. If you do have a capital improvement funding, then if you have to have additional funds, like maybe 3 or 4 months of HOA dues already on deposit, and it'll tell you what your monthly rate is as well. So those are all factors that could affect the affordability of a home in a particular subdivision.
Yeah, because like sometimes you get into a bigger community is even better than the smaller one, right? Because they have enough money, huh?
Sometimes,
sometimes. But if they have so much of the expense, then that's another story. But how? Do you understand the structure of the HOA? Like they gotta have board of director, and then how that arranged. I mean, who hire them? Who hire the homeowner association?
You go back to the CC&Rs.
Yeah.
As I said, that's kind of the rules of the road for how it's done. You have situations where some HOAs are self-governed and self-managed. Maybe you've got 40, 50 homes in there, and the cost of having a full-time property manager to run your HOA is prohibitive. And those types of decisions can be made from the board of directors. The board of directors, of course, are voted into position by the other homeowners in that subdivision. So those board of directors, if they come in and there's a decision made that they're going to be self-managing, those board of directors come in and they may have to take leadership positions to make sure that certain things are being done themselves. On the other hand, and certainly with most of the major subdivisions out there,
Yeah.
you'll have a board of directors, and they will select a professional management company, and that management company handles the day-to-day things, the collection of the dues, making sure that all of the common areas are properly cared for. In some cases, if you have like condos and those types of things, the exterior of the building and roof may be the responsibility of the HOA to pay for, where the owners only pay for what improvements are inside the walls of the building. So each one is going to be a little bit different, but if you have a professional management company, they will keep track of what's going on. They'll have insurance policies, they'll hire the maintenance people, and they will have standards. You know, they'll all the way from what type of tile or shingle goes on the buildings to what colors you can use, as well as what types of plants you can have in your front yard, those types of things. So it's very important. And during the purchasing process, the title company will order the CC&Rs. It's very important that you take a look at those things. You know, imagine if you had a home-based business and you purchased and you didn't pay any attention to the CC&Rs.
Yes.
And then all of a sudden, now you start your home-based business and you get somebody knocking on your door and they go, you can't do that. The CC&Rs say you can't have a home-based business. So you need to be very careful as you're going through your due diligence process to pay attention to that as well.
Okay. So, but then if they don't say anything like that, then it's okay for them to do.
Well, remember, it's not a matter of them saying it. It's a matter of, they will give you the CC&Rs, and then it's on you.
It's on there. I mean, like,
it's on you as the buyer. It's your responsibility to review that written information.
So, there's a lot of different expenses for the condo, because there's HOA so many. So HOA can be like for the group, for the condo, or can be even their house is a single family, but they stay in the complex, right?
Right.
So it's become like a community, a community like that. So,
And you know, it's not unusual on some of the higher end HOAs to have an HOA within an HOA. In other words, you've got a major HOA. Here's all the rules here. But now we've got a smaller clump of very high-end custom homes, and we want a nicer clubhouse. We want a nicer swimming pool. We want a tennis court where the other complex had basketball courts. But those types of things. So who pays for that? Well, those folks that are in that smaller area, they agree to form that kind of association. And that's how that gets paid for. So you could end up with 2 sets of dues each month.
So, like the board of directors, did they get paid?
Generally speaking, they're volunteers.
Yeah.
If the CC&Rs say that they get paid, then in those instances, then they get paid. But generally speaking, they're volunteers.
Okay. And then, like, who has a right to, let's say, a small complex, but the expense is so high, unreasonable. We're talking about all the expenses, like the money they collect for that type of property, and the service that they've done like that. So who has a right to review those costs, those fees?
Well, if you're
like board of directors, you
well, the board of directors would have them, of course. But you know, if you're paying as a member of an HOA, you should have the right to review any of their financial documents, because it's in your best interest to know that they're solvent, and that they're spending the money that they're collecting from you and the other homeowners responsibly, and they're meeting the requirements that are set forth in the CC&Rs.
Yeah, those are very important, because like sometimes we talking about we want to stay in the world where you know you're right, right? If somebody, let's say if you are the person out of state, but you still have the house at the complex like that, but like somebody solicit you to purchase that, and then you don't want to sell it. And then they trying to find every single little thing so that they can make you have a hectares and drop it and sell it back to them. So those are very important too, right? If you understand what is in there, and you have your right. What's your right? Your right to request something, your right to do something. Then that's very important.
Yes.
Like a lot of people don't know. That's why I'm saying, like, buy a property, a single family. I think easier if it is no documentation. No, if no a community, it's just like by itself, then easier. And then when it's into a complex, then that's belong to something there. CCNR need to know, understand, and the requirement, like the person have no knowledge who is the board director, and then the board director didn't even want to come and introduce themselves. They hide their face,
right?
So I don't understand like certain situation like that.
Yeah, generally speaking, though, the HOAs that are run properly, everything should be above board. And I would say any time where you're having difficulty getting information on the operation of the HOA, that's a red flag right there. So, and it's during the process of buying it and that you're in escrow, when you get those CCNRs, you really need to take a look at it. And if you're not satisfied, you can go to the property management company and say, hey, I'm looking at buying this, and ask them for information. You can ask the seller to request that information, and that seller certainly, as an owner, has a right to receive it and then pass it on to you.
Oh. And then, like, when they, how many percentage to vote that they accepted as the one person become a board director for that for that complex? How is it percentage, or like each of the homeowner, or?
Yeah, I wouldn't. I don't think that there's a certain percentage, as much as it's probably just a matter of how many votes they get.
Oh,
but
okay. Even like 2 votes, they still okay.
You never know if the rest of the owners are that lackadaisical that they don't bother to vote. 2 votes or 3 votes could be enough.
They still consider like okay.
But you kind of bring up an interesting point, and I primarily see this going on in situations where you have a condo, and you have somebody who buys 3, 4, 5, 6 condos, and because they've got an ownership in those condos, their voting rights are even stronger than the average person who only has one. And so that can become a little bit of an issue, and they can certainly install themselves into director positions.
Yeah.
But that's another consideration that you need to know about while you're going through the purchasing process.
Yeah, we just need to know our right, like what we can do when things didn't turn out correctly.
Yes,
right? Yeah.
Exactly right.
You have a right to request, to ask questions, or to write the complaint or whatever that is, right? So, but then who control those rule? Like when like CCNR or bylaw and everything. At first, they have to get somebody approve it, or like for the whole complex?
Usually when they're at the state of creating the CCNRs, the developer is the one that writes that up. They have an attorney who specializes in that type of thing, and then they put it together. That's usually shared with the city, because the city is going to want to make sure that the city's interests are also represented. The cities, generally speaking, none of these cities want to go out and develop a complex or a subdivision. They want a developer to come in and spend the money and pay for the infrastructure, and the city hooks up to it. Once they're satisfied that it meets their standards and they accept it, then it becomes city property.
But then can they change it after time? When the CCNR, let's say the CCNR didn't indicate certain things, but down the line, the person that's staying there didn't even know anything, and all of a sudden the thing changed. So usually is that in the city, they have to record an amendment?
Yes.
Right? They have to, right?
Yep. They have to make an amendment to it, and sometimes the board of directors is sufficient to make that change. But oftentimes the board of directors will hold a hearing for the homeowners at large, so that they can get their input.
So whatever the question I raised up, just like I have mentioned, and Scott also agreed, like knowledge is the power. If you understand something, if you know you're right, you can you can request, you can read, you can protect your own home. Yeah, if something occur, but like if you don't know, then you will lose that chance, and you might gonna just have to do whatever is said. It's just like that. Yeah.
Yep.
Yeah. And at the beginning, the role, the real estate role at that time, very important, because if the person thoroughly explained to you, because sometimes the buyer didn't know what to ask. Like they don't expect anything.
Excellent.
They don't know.
Yep.
Yeah.
No,
right.
it goes back to the old adage, you don't know what you don't know.
Yeah.
So that becomes, part of that is the educational process of a realtor as you're going through the buying process.
Yes.
If I'm a realtor and I'm representing a client who, I'm just going to use that example of the home-based business once again. So now I know I've got a client. They're gonna be running their business out of their home. I'm going to take a look through the CC&Rs, and I'm going to go to the section that talks about that, and then highlight that, bring that to the attention of my client. Because if they prohibit home-based businesses, my client's going to want to know, because that gives them a valid reason for canceling that contract. They can walk away from it, get their money back. So, but it needs to occur during the due diligence period, or if that those CCRs are delayed being sent to you from the HOA, you still will have some time to be able to review it.
Like the parking also important, like if they do, the home business is very important, like because sometimes most people nowadays, they do everything by home.
Yes.
Yeah, from insurance, from accounting, everything, like they do by home. But if the association and they are not approved there, then actually, how do they know? They don't advertising anything outside though. They do inside the house.
It's kind of funny, because if a neighbor doesn't like something,
the neighbor
can complain. Or in some of the bigger subdivisions where you've got a professional management company, they do have people who drive through the subdivision and they look for violations. Maybe you left your garbage cans out too long. Maybe you didn't get the weeds out of your yard. Maybe they see that you've got different traffic showing up at your house all the time, and you're not supposed to be having a home-based business. So, it always seems like you maybe can get away with it for a while, but eventually it always catches up.
Yeah.
So better to be well versed from the very front.
Make it like from the beginning.
Yes.
Yeah. If allowed to do that. Yeah, I didn't know about that. I didn't thought about that one. Yeah, in a way. So got to be something there that we learned. Yeah. So you have anything else to share with our audience that help them?
Once again, when it comes to doing loan or understanding how much you can afford, the key thing is settle your expenses and your spending down. Stay as consistent as you can. You're going to need to have tax returns. You'll have to have W-2s.
Yes.
If you're self-employed, there are still programs out there that will take self-employed tax
returns still the main thing, right?
Yep. Tax returns.
Or pay stub for the regular W-2.
Absolutely, because at the front end, when you're trying to get pre-approved, they'll ask for those things. But I guarantee you, as you get closer to the end where they're getting ready to fund, they may ask for all of that stuff again. So you need to stay on top of your expenses. Don't go out and buy a new car.
Yeah.
Wait until you're already in that new home and then go buy the new car.
Or even co-signer. Yeah.
Don't sign up
because
for a
co-signer is still considered you purchase, even you don't purchase. Like we will say, no, I didn't buy anything.
Yep.
But somebody asked me to co-sign something, but it's not my car.
But that will affect your credit.
Yeah.
The big ones that I see right now, pardon me, are student loans.
Oh yeah.
For the first-time home buyers.
Yes.
And of course, car payments. Car payments have gone through the roof from what they used to be, and so those expenses, they eat away at your buying power and kind of force you into less of a house than what you could have afforded when the rates were lower. But you really, really, really need to get a handle on everything, keep it consistent, report everything, even if it's adverse. don't hide anything. Tell your loan officer up front.
Yeah, everything. So that the plan ahead always
Yep.
better.
You
Yeah.
may, and they may go ahead and say, hey, you know what, Scott? You can't afford to buy right now, but
Yeah.
you need to look at these debts right here. This
Get it
one,
down.
pay this one off, refinance this one, you know, and get a deferral on this or that, whatever it takes, so that you can get yourself into a good position to buy. But everybody is individual, so it's not like I have the answer to give everyone a magic answer. You need to sit down with a loan professional that can walk you through
So
it.
maybe I ask you this one question when you bring up about the debt ratio, about the debt. This state is like husband and wife, right? So
Yes.
whatever the debt owned by the wife become the husband as well
Well, certainly in the loan process,
in
yes.
the loan process.
Yeah.
But like the purchaser is like one person, that person didn't own it. Let's say okay, let's put it. The wife owned debt, a lot of debt. But the husband is the one that purchased the home. The husband free and clear.
That would be up to the lender.
And then like the person that purchased it and stand on purchase is only the husband. So I didn't know if they consider that debt for the wife.
Well, and you need to talk
Yeah.
to a lender that knows how to handle that particular situation.
Yeah. So those are something, maybe 10-40 together, then they should consider. I don't know.
Yeah.
Yeah. But those are the scenario, those are the things like maybe one or the other can think of. If the debt ratio too high, like one person in the family, just go ahead and own all of that. And then the other person have it all.
If they have sufficient income and lack of debt, that could be a possibility.
Yeah. So, okay, but of course the loan officer is the best person to ask more detail about it.
Yep.
So this is just like how to get ready for the financing, the scenario, how you get the loan qualify. Of course, you base on your income to like the monthly, the calculations is always there that they know how much monthly payment, and then they have to have like 3 times or 2 times of the income.
And the loan officer will get them into a program that they can afford, as well as tell them what the requirements are for it.
And if they don't have one, they can go to their own bank, right? To request somebody help.
You're free to go to any lender you want. And frankly, I've had clients who were, they make the offer and they start with one lender. And by the time that we get to closing, they've already gone through another lender. You know, they're looking for more favorable lending conditions.
Yes.
There's nothing that stops you from doing that.
Yeah.
You just have to disclose to the other party, hey, I'm making a change in my lender.
So when they go in there and ask for something, it's not affect their credit, right? Because before they ask the loan officer to qualify them or something, they ask for Social Security and approval to let them run the credit, to let them know. So all that will losing their point?
Well, it's not as bad as it used to be.
Okay.
If you're out there and you're going to shop for rates, or you're going to shop to get a better lender, try to do it in a much shorter period of time, like a 30-day period. But if every month you're out there and you're shopping rates, that is going to have a long-term effect.
Yeah, because like, maybe this month different, next month different.
Yeah. Yep.
So anyway, the planning is always the best for everything that we do in our life.
Plan early.
Yeah, plan early. Yeah, have to plan early, like a few steps further.
Exactly right.
So I think we're going to see our audience next week again.
Okay.
Time's up. So fast.
It does go fast, but there's a lot of information that we covered just on a couple of topics, and they're all very important to folks who are out there trying to buy a home for themselves.
Yeah. So I hope that everyone can get this as great information, or any question, any concern, you can reach back to us, either to Scott Bartlowe at SF Fuller Real Estate Investment, or LinhVi at VAATV.com. at gmail.com. So you can tell them your phone number.
My phone number is the easiest way to get hold of me, and it is, you can text me, you can call me. There you go. It's even got my email address. So it's 480-213-7691. And my email is Scotts, SCOTT with an S, AZ for Arizona, and real estate at MSN.com.
Oh, and then also anyone looking for the business, for space to do business, in Abachi, you have a few space available.
Yes.
That you can, you guys can contact Scott so that he can show to you. And
I have one other thing.
okay.
I have a client as of this evening who asked me, he's looking to open up an automotive garage for hybrid and electric vehicles, someplace in the Tempe, Scottsdale area. And he's looking for a retail location with 4 to 6 bays. So if you know somebody that's got a property like that, please give me a call.
Yeah, that would be great. So thank you very much for watching us, and we'll see you next time. Hope everybody have a great weekend. See ya.
Bye-bye.
LinhVi xin cảm ơn sự theo dõi của tất cả quý vị trong những giây phút vừa qua. Chương trình VAATV xin kính chào, tạm biệt và xin hẹn gặp lại quý vị vào lần phát hình kỳ tới. Mọi chi tiết về thông tin thương mại và bảo trợ, xin mời quý vị hãy liên lạc về địa chỉ email vaatelevision@gmail.com và số điện thoại là 480 289 9816 480 289 9816, website vaatv.com và vaaznews.com. Xin kính chào, tạm biệt.